So, in contemplating taking outside capital again after I retired, and in fact, I look at the victims out there of this panel, and I wonder what it is you're trying to solve for in general. Most of the time, I was trying to solve for in the last, call it 25 years, how to earn rates of return with good risk rewards that were uncommon, not available to others, and to distinguish myself and my team from other teams and other families that are trying to put assets to work. So what my partner and I asked ourselves was, how can we access assets that most family offices or institutions cannot source, analyze, due diligence, and structure? And it's been an extraordinary evolution, because what I have come to understand, again, actually, what I've revisited, is that the smaller you go, the less worth it is for you, but the better your due diligence can be. Just as when I started in the risk arbitrage business in 1994, small bank deals had risk arbitrage spreads of 15%. Big $5 billion deals had risk arbitrage spreads of 6%. So the bigger, the more commoditized. So what I've tried to do is source off-the-run assets that are not privy to, that cannot access the billions and billions of dollars that are maniacally flowing into private equity. If that means buying an amusement park, the Santa Monica Pier amusement park, the Ferris wheel, which me and my partner just did with some other partners, then so be it. The cash-on-cash return there is extraordinary. That deal is spoken for. I'm not selling anything to anyone at this panel, unless you pay higher fees than the other people. Just kidding, of course. So here's a small asset that institutional buyers sort of shunned because it wasn't big enough, because it didn't fit into a box. Six Flags didn't buy it, for example, because it wasn't a gated amusement park. So we came in, and what we discovered was this extraordinary asset that was throwing off all this cash flow. But the due diligence was laborious and difficult, because we were trying to understand an amusement park in California, governed by a city council, many of which call themselves socialists in Santa Monica, California, and I'm no socialist, so it was difficult to get on. So we encountered all these small deal issues. Notwithstanding the structuring, the financial modeling, the partnering, the cultural issues, we encountered issues we had never seen before. But I can tell you all that if you're family offices and you're trying to make good rates of return and not just cover our rear ends, then I would make it my sort of mission in life to find these types of assets that are not picked over by the big guys, that are the subject of the type of due diligence that one cannot do on public companies. There is no insider trading on a private asset, which is the beauty of it. So you can meet everyone, ask any question, ask it obsessively to the point where they hate your guts, and then ask it again.